Okay, so today I'm going to tell you why I think Palantir might be going to $45, which is a 33% decrease on Palantir. There's a lot of technicals that are going behind this, and there is a high probability that this could potentially happen very quickly. Okay, so I want to be 100% clear. I'm not just betting on and preying on the downfall of Palantir, right? I am looking at statistical probabilities, I'm looking at technical analysis, I'm looking at all of these different factors that I'm going to show you in this video. And before everybody goes into the price discovery, we're shorted in price discovery, all that stuff, we're going to shoot that in the foot potentially here in just a second. So give me a chance to kind of prove that wrong, or at the very least, like make you question it and potentially refute it before we start, doing all that stuff, talking about, price discovery and things of that sort, right? So what I want to do first and foremost is get into the charts, and that is exactly what we are going to do. All right, so give me 1 second. I'm going to pull up my charts, and we're going to get directly into this. All right, because this could get pretty nasty, to be honest with you. Now, first and foremost, if you look at Palantir, I'm going to take everything off of here. All right, if you look at it on the hourly chart, this is the first thing that I'm seeing. And thank you to everybody that showed up from the original Drew Wolfer channel. That has like 9,000 subscribers. And thank you for understanding that we've come over to this channel because we got shadow banned for talking about, some 3-letter agencies on that other channel. And we're starting up a new channel and doing that over here without all of the restrictions that YouTube was putting on us. So thank you for coming over to the new Drew Wolfer channel here. Now, we're going to zoom out just a little bit. I'm going to show you exactly what I'm talking about, okay? First and foremost, look at this RSI, okay? This thing's trending downwards, right? But what is happening up here, okay? If you look, you'll see, and I'm going to pull this up so that everybody can see it, right? Because it's easier to just see it whenever it's blown up, all right? Now, this is a higher high, right? Than this over here. This is a lower high, okay? There's no refuting that. That's pretty self-explanatory, right? Now, where is that at on the chart? That high is right here, okay? Look at that. There's a higher high on price being set, and there's lower highs on RSI being set. Does anybody know what that is? Yep, you got it. That is a bearish divergence. So if you guessed bearish divergence, then you're absolutely correct. We're looking at that on the 100 or on the 1 hour chart. Sorry. Now, I want to zoom in just a little bit and show you how far we are away from the moving averages before we get into some other stuff, because there's some way more problematic stuff happening on higher time frame charts. As I promised, if you came from the original Drew Wolfer YouTube channel, as I promised, I'm going to tell you some of this stuff, right? Let's measure how far price is from the 50 moving average. Well, the 50's right here. We're looking at 8%. Where's it from the 100? 19%. We don't even want to know where it is from the 200, man. It's pretty substantial. The 200, it's looking like price is about 26%. This is just on the hourly chart, okay? This is extremely problematic. What's happening with the stochastic, all right? You're setting lower highs when you're setting higher highs on the chart. Not great. What's happening on the MACD? You're seeing a little bit of a push, right? But you're again also setting lower highs on the MACD. Bearish divergences, man. What's happening here on the momentum? Again, lower highs, okay? And look how this is crazy, crazy high momentum, all right? Momentum was like 13 up here. The highest it's been is like 6.8. This is literally double what it was in any other any other portion of the chart, okay? And this gets even more problematic the further we get into this. So we're going to turn off this bearish divergence because we know what that's about, okay? This is where we want to get into the higher time frame charts like the daily, and then we'll get into the weekly after that. So what's happening on the daily, okay? If you've got a good eye, you might already see what's happening on the daily, okay? We know about the bearish divergence. We know about all of that. What's another thing that's giving me, some confluence or something that's saying, hey, we might be going down here to this $45 range right here, right? Well, the first and foremost thing is that we have a pivot high literally right here. That's what we call a pivot high, okay? If we zoom out on this house sway, you just zoom out, where does this pivot high take us? Damn, Daniel. takes us to the previous all-time high. That's not awesome. Okay. So, all jokes aside, what else is there, right? What does this look like to you? Does that look like a gap that hasn't been covered? Well, Drew, it's been covered. Nope, it hasn't. Let's zoom in a little bit further and you tell me if this gap's been covered, okay? What's the low of this? The low of this is 51.61. What is the close of this? 51.13. Okay, so there's still 50 cents in between the close of this and the low of here, okay? So in order for this to actually be a closed gap, this wick would have had to come all the way down here. Okay, it didn't. Now, you might say, oh, that's not the strongest gap. Okay, totally understand it. I get it. Let's zoom out a little bit more, right? Not a strong enough gap for me, Drew. I hate that gap. That gap sucks. I need something better than that. What about this one? Is this one a little bit better of a gap for you? From $41 all the way up to $48. The low of this was $46.86. The close of this candle was $41.41. Okay, let's measure these gaps really quick. This is about a 5% gap right here. Okay, this one. Yeah, 4.21%. Let's measure this other one because the bigger the gap, the bigger the deal. Yeah, it's 14%. A 14% gap. If you know anything about gaps, gaps get filled, baby. So we already have support here at $45, right? Some long-term resistance that we broke through. And guess what's happened? Nothing. Literally nothing's happened. We haven't even come close to retesting this. Not even relatively remotely close to retesting this $45 level. You have to retest these levels. When you flip major resistance with a gap, you got to come back and retest this level. So that's why I think another reason why Palantir's coming down here. Okay. That's not enough for you. I get it. I get it. You're skeptical. You're skeptical. Okay. What else do we have? We have this thing called a Fibonacci retracement extension. Okay. And what that means is you take the Fibonacci, the previous low to the first high and then back to the previous low. This is on the old range, like your previous all-time high. So that's exactly what we did. We took it from this low right here, which is the low of this range, to the high, which was the previous all-time high, consequently, which is also this support level now that was resistance, massive resistance. And we took it all the way down to the bottom of this range. And that gives you where your stock or crypto or whatever commodity that you're measuring can be going. And guess where it puts us? The 1.618, $63.84, man. That's where we're at. $60, man. We literally kissed it. We tried to kiss it right here. I missed it on this one. I already entered a short position right here, and then I added to it once we kissed it again because I was like, yo, I want to be in this trade. We just kissed it. Maybe I missed my chance. So I entered here and then averaged in right here. Now, if we go up here to about the $67, $68 range and we close a candle like massively above this, I'll know that, potentially we're probably not going to be going down yet. And there's a little bit further upside and I would close out my position. Now, say I were to do that, right? Say that my position is right here, okay? And say I'm to close out at 68 bucks. 68.50, screw it. That's a negative 8, that's an 8% move up, right? Okay? What's the move down that I'm targeting? If you know what the move down is that I'm targeting, it's substantial, okay? We're targeting this move to be down here to about the 51 range, or ultimately what we want to see is the $45 range. So if I'm here and I'm targeting the $51 range, that's a 19.5% move. So that's a 2.5 ROI, right? If I'm targeting 41, even worse, right? Or if I'm targeting 45, 28, 29% move. That's literally almost a 4x risk to reward. All right. Or maybe a 4 to 6% potential downside up here if you were to stop out up here. Dude, Probabilities, man. But okay, maybe this isn't enough for you, right? Maybe this isn't enough for you. All right, cool. Here is the micro trend Fibonacci, okay, from where we went parabolic. Where's that golden pocket at? At 0.618. Is it right there at 50 bucks? It is. Where's that 0.786 if we lose that? Is it at $46, which is right above our target? Dude, you can't make this stuff up. You can't write this stuff in movies, okay? There's some more confluence for you. Let's pull a bigger term fib. All right. That wasn't enough for you. We don't care about the short term fib. We want the swing low to the all time high. Okay. Where's that at? Where's the 0.5 on that? $43, just under our $45 price point, right? And right next to a pivot low right after this pivot high. Where's the 0.382? 48 bucks, right? Where's the 0.236? Right above that first gap at $51. This is at $54. This is crazy stuff. Could go all the way down to 37 if you hit the golden pocket. I don't think we're going to 37, but what I'm saying is that $50 level all the way down to that 45 to maybe potentially $41 level for that secondary gap. That's doable. Okay. Now let's look at the swing high of this to the swing high or to the actual all-time high, right? 618 is at 41.79. The 0.5 is at 46, just above that support line. Guess where the 0.382 is? Dude, I can't write this stuff in books. It's at $50. Okay, let's do one more. Let's do one more just to see. Like, and I don't like that one, Drew. I don't like that one. That fib sucks, right? All right, let's pull it from the all-time high back to the all-time low of this run. Okay, this entire run dating back to December of 2022. It's 2 years. It's a 2-year fib. Where's that 0.382? $2.50. Where's the 0.236? At $51, where that gap is. Gap. Let's see it. I'll show you. This is where the gap fills. This is where the $51 gap fills. Crazy, huh? Crazy. So let's say that that's all not enough still. That's still not enough, Drew. Like I don't believe you. I still don't believe you. You don't have to believe me. It's not about believing me or not. It's about probabilities. It's like that's what this game is. It's about probabilities. It's not about like whether you believe somebody or not, or somebody's TA is whatever. We're not taking positions based on like Palantir because they're the best AI coming. We don't care about that, right? We care about the fundamentals and the technicals, okay? And their fundamentals lackluster, to say to say the least. And their technicals are pointing to potential downside. Now, is this going to tank tomorrow? Maybe not. We might wick up here, close above it, and then, the next few days we go down, right? You might have to average in a couple of times on this. But my point is that if all of this stays true, it's looking like a downward trend, okay? And look how far we are from the 50, okay? Where's the 50? The 50 is at 44 bucks. By the time we get to the 50, it's probably going to be about 45 bucks. Guess what our price target is? 45 bucks, man. That's 29%. These moving averages are literally magnets, okay? They want you to come back to them, and at the very least it wants to come back to the 20 moving average, okay? This one is a magnet. This is the 9. No one cares about this. But this is the 20, okay? That's a 23% move, and guess where it's sitting at? 50 bucks. By the time you get there, it's probably going to be somewhere up here in $51, $52 range, okay? Now, where's the 100? This is on the daily chart. We haven't even got to the weekly yet. 44% move down to 36 bucks and 53% down at $34 at $30 on the 200 moving average, okay? These are massive moving averages. I'm not saying that we get to this range right here, but I'm saying it's very likely that we could get to 45. It's very likely that at the very least we could get to 50, 51, fill that gap, right? And we've seen so much confluence in that area, and in this area, it's pointing towards it. All right, so let's pull these up. What's the Stoke doing? Massively overbought, right? Stoke is massively overbought. It's heading down. It was at like almost 100. Yeah, it was. It was at 100, okay? Enough said, right? It's curling down past the signal line. What is the RSI doing? This is where stuff starts to get problematic. Look at this RSI, okay? 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row, the RSI has been above the 70 line. And only one of those days was it actually below 80. Okay. Actually, two of those days. So 7 out of the past 9 days, it's been above 80, which is extremely overbought. Okay. This is extremely overbought. It peaked at 85. Okay. Which was on November 11th, right? That's November 11th right here. Okay. Let's look at what's going on with the MACD. MACD is way, way, way over. Just, dude, look at this thing. It trumps every other MACD pump that it's ever had, right? Even dating back to that previous pump back in 2020 at the previous all-time high, right? This is crazy out here. It needs to pull back here, right? And look at the bars, the histograms comparatively, right? To all of the other histograms. It's 2 times as big, right? Now, is there more volume coming in? Yeah, probably. But is it enough volume for that to be substantiated? No, definitely not. But let's look at the momentum. This is where it gets wild, okay? The momentum is literally all the way up here at like 23, all right? The highest it's ever been is 13, and the highest it's ever been recently was 10. This is double its previous high, and it's almost 2.5x the like near term high on momentum. This is crazy. This momentum is going to snap back here. Okay. This is incredibly, incredibly out of its range. All right. Now let's just see for the range. Like, let's just pull this range right here and let's look at the VPVR on this because I think that'll tell you a lot. Dude, the point of control is $24 on this. Let's pull the VPVR for just the range that's been going up. Okay, just this range right here. Let's see what happens. Point of control is at $37. Okay, now let's zoom in a little bit further and let's say, okay, we only want from this $46 level all the way up, right? Point of control is at $45. There is so much confluence pointing to this $45 level. Where's the value area high? $55, right? So like this thing is incredibly overextended. So you already know about all of the moving averages, you know about the point of control, you know about all of the, the bearish divergence, all of the Fibonacci's, the Fibonacci extension, you know about the gaps, you know about the $45 support, you know about literally everything right now, right? Let's go to the weekly chart and let's see if this gets worse. All right, here's the weekly chart. Okay, first and foremost, look how far we are from the 50 moving average on the weekly. Actually, that's not even it. This is where we are. We're at $64. This is the 20 moving average, right? We're 43% away from that, which is at $37. Guess where the 9 is at? $46, right at that friggin' support, okay? Then we've got the 50, which is 57% away at $27. We got the 100, which is literally 68% away at $20. And then we've got $18.50 for the 200 moving average on the weekly. I don't care as much about that because this is, relatively new. It's only had 200, weekly closes for like, I don't know, a few months, right? Dating back to July of 2024. Well, let's see what's happening with the momentum. Yet again, momentum is 2x what it was. 35, its highest ever was 17. Okay? That's a lot. That's a pretty big deal. Okay, what's happening with the MACD? Again, the highest it has ever, ever been. Massive, massive histograms here. Okay? Higher than it's ever been by a lot. Okay, what's happening with the RSI? Again, higher than it has ever, ever been. Okay? Let's look at the RSI. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 straight weeks in overbought territory. Okay. And it's at 84 right now. All right, let's look at the stochastic and see what it's doing. Dude, stochastic's been in overbought for like a year. Not a year, but like 6 months, 4 months or so. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 straight weeks almost. Yeah, 13 straight weeks that it's been in overbought. Okay. This is not looking like awesome for Palantir. Okay. And so here's my bias. Okay. I am okay with risking right here. If we look for a trade, okay, to target the $51 range, you're looking at a 21% decrease, right? If we target 45, we're looking at almost 30%, okay? Now, if we set our stop loss out here somewhere in like the $68 range, call it, dude, even $70 is only like a 7% move, 8% move. Let's zoom in a little bit. Let's get this a little more accurate. That's a 4.8% move. Okay. 5% move to $68, pretty much. Call it 6%. You're risking 6% to gain over 20 if we get to 50, and you're risking 6% to gain like over 30 if we get to 46. Okay. This is all day. I'm taking this trade 9 times out of 10. Now, if it gets up here, will I think about closing out? Absolutely. You also want to go and look at the put to call ratio on this and the max pain. Max pain for today is $38, okay? That's for the options that I'm in is 1220. Mine close on 1224. Max pain on 1220 is $38. They want it to close at $38. That's where the options makers make the most money. Okay, even today, the max pain is only at about $48. Okay, they're probably not going to be able to push it anywhere near this, but it is what it is because they'll make it up in subsequent weeks after that. Max pain is $57 for next week. See what I'm saying? This is where we start to see things, happening. And this is where you want to see, what's happening with the options and the put to call ratio. When you see a put to call ratio, this means there's more puts than calls. So of course they don't want the price to go down right now because they're trying to shake all of these puts out because they closed today, right? So they want it to close out of the money. Same thing here, same thing the following week. Then it starts to trend down once you get into later December, the 20th, the 27th. This is when it starts to get to where there's only 8 puts for every 10 calls that are sold. There's 6.5 puts for every 10 calls that are sold here. This is where it's starting to outweigh, and this is kind of the sweet point. $38 is the max pain scenario right around the time that my put options will be expiring. So these are the things that you need to look at whenever you are looking to trade these types of, scenarios. So, I mean, that's essentially exactly what we're looking at right now. And sorry if my, picture looks terrible. I filmed this video outside really quickly because that's where I'm at, and I wanted to get this out. So with that being said, if you like content like this, let me know. Make sure you subscribe to the channel. Boom! Bang on that notification bell. Like the video. Let me know what your predictions are. Let me know if you take the trade. I kind of showed you where I would put my stop loss if I were you, or if I were me in this scenario as well. And let me know what your average in price is if you are shorting. Or if you totally disagree, give me some bias behind it. Don't just say, oh, Palantir to the moon. I don't care about that. I want to see data. I want to see like real reasons to say like, no, you're wrong about this. I'm totally open to hearing contrarian opinions. And with that being said, I will see you in the next video. I appreciate everybody showing up for this one. Make sure you subscribe to the channel. Peace.